you have a severe recession, if not worse. Ray Dalio, he's made an unbelievably compelling case for a real economic catastrophe. I advise people to own two currencies, the dollar and gold. The dollar, because inasmuch as all paper currencies are toilet tissue, the dollar is double-ply. Gold is the best performing currency in the entire world. Everything that's happened since 2007 has only reinforced my view that gold has the potential to be the biggest bubble we've ever seen. All fiat currencies are flawed, but they are relative instruments. It's the question of who's the least bad. What I do predict with metaphysical certitude is that we will see over the years the dollar absolutely collapse against the one currency that does not represent anyone else's sovereignty or obligation to honor, and that is gold.
Billionaire investor Tom Kaplan has landed the Holy Grail of gold deposits. Kaplan is the chairman and the largest investor in NovaGold resources, and he recently unveiled an agreement alongside fellow gold enthusiast John Paulson to buy Barrick Gold's 50% stake in the Alaskan Donlin project for $1 billion. We will be speaking to him about this and, of course, get his thoughts on this grand moment gold is having. He joins us today. Tom, it's always so wonderful to be with you.
Daniela, the pleasure is always mine. Wonderful to see you again.
Like I said, you're on top of the world here because RBC has said that this mine could produce 1 million ounces per year for the next 30 years. Now, the question many people are thinking, why would Barrick let this go? Of course, we know they want to focus on copper, and obviously the price is right. But this is a huge deal, Tom.
It's something that has been literally 15 years in the making. I've offered to buy Barrick's stake in Donlin going back to when Aaron Regent was the CEO of Barrick and every other CEO since, including Mark, on several occasions. What happened was a beautiful alignment of the stars. Barrick, as you say, has very openly said that for the next 5 years, 80% of their, quote, gold equivalent production is going to be in copper. And when you look at the projects which they've slated, Reko Diq in Baluchistan in Pakistan, Lumwana in Zambia, not to mention the Pueblo Viejo expansion in gold in the Dominican Republic, their plate is full. But it came at a time when they really could not simply do nothing and kick the can down the road to maintain their optionality while other things came to fruition. We were really in a position where, although there are no use it or lose it provisions in Alaska, they quite understood that there were more than two of us in this marriage, and we have Native corporation partners who have kept faith with us and with whom we've kept faith. And at a certain point, you have to fulfill your promises. And the truth is that since 2021, we had both said as partners, Barrick and NovaGold, that we were going to update the feasibility study. And unfortunately, it should have been finished by last year. We would now be in a position to be able to make a construction decision. So basically, you have to come down to a Fisher cut bait. And we found literally the perfect partner. Not just we found him, he knew us, and he found that this was an irresistible opportunity. John Paulson is the second longest owner of NovaGold, other than my company, Electrum. He's been in it since 2009. He knows it intimately. His people have been up there. And he essentially concluded that having been a gold bull as long as I have, he wanted more exposure to gold. I think it's very clear that he regards this as the big trade in the same way as he saw what was going to become the precursor to the financial crisis in the big trade, in the housing crisis. And he basically sees gold as that next big thing. And as he put it, I want the maximum leverage to this theme. I know Donlin, it's the best gold project in the world, and it will enable me to have the same kind of execution success as I had during the financial crisis from my clients, which is to say, making multiples on his investment. And so here we are. The world has completely turned upside down for us, or I should say right side up, because going into 2020, 2021, we were a $4 billion market cap company. We were a $12 stock. And the inability to be able to provide news to the market as a consequence of the headwinds that we had from our partner um, really made us, in a way, dead money. It's astonishing and yet unbelievably gratifying that Paulson, Kopernik, Lingato, the Agnelli family, were all active buyers of the company, particularly after December 2023, when we essentially said in public, we're at an impasse with our partner. And the stock went down, naturally, but we had to be transparent with our shareholders. So with equal transparency, I'm able to say that whereas before we were dead money, now I do believe that we have the potential to be the best performing gold development story in the world for all the reasons that we know. Donlin is, in its combination of attributes, simply unique. What is it that drew me to Donlin? What is it that drew John Paulson, one of the savviest, most insightful identifiers of a macro trend and the right vehicles to be able to execute a macro trend? What is it that caused him to want to put $800 million directly into the mine and allow NovaGold to go to a 60% economic interest? And here it is, to reframe or just simply to refresh and dust off why we believe Donlin is not only the best gold development story in the world today, but in its combination of attributes, unique. First of all, the size. We're starting off with 39 million ounces in reserves, plus another 6 million in inferred that's adjacent to the pit. To our knowledge, there's never been another mine that began production with over 40 million ounces of gold. Even the great Gold Strike mine of Barrick ultimately reached 40 million ounces. So this is extraordinary by any measure. But it's hardly the end of it. To the contrary, we may just be scratching the surface. That 40 plus million ounces is on only 3 kilometers of an 8-kilometer belt that we know is mineralized, but we've never been really allowed to drill along strike for a variety of reasons. Barrick really never wanted NovaGold to be able to shine because their expectation was that they were always going to own it. And in such a circumstance, why would you want to help promote it?
You don't even have an idea of what else is there,
Oh no,
Tom?
we're open to depth. We're open laterally along that 8 kilometers. And remember, that entire belt that I'm referencing is only 5% of the land package. My chief geologist, who's responsible for most of our discoveries over the last 30 plus years of my career, believes that it's possible that there could be another Donlin at Donlin. In truth, I
Wow.
believe that we're dealing with the new Nevada, the new Carlin. And maybe that's not so surprising because Alaska is the second largest gold producing state already. after Nevada in the safest jurisdiction in the world. And this is something that I want to emphasize. I made my bones, as they would say, in Bolivia, and then in Zimbabwe and South Africa. In Bolivia, it was silver. Zimbabwe was, and South Africa were platinum. In both cases, we had 100x returns. Then in hydrocarbons in East Texas, I took control during the financial crisis of the company, Moto Gold Mines, that owned the Kibali project. And I sold that to Mark Bristow at Barrick. And to this day, he'll still say the only two people who believed in Kibali were Tom Kaplan and me. So I really do understand being able to be aggressive and make money, serious money, in the developing world. But I came to the conclusion that that era was over. I came to the conclusion that there was a very real possibility that if I was indeed right on where gold is going, the tragedy will be for many investors that they get gold right. They even get the assets right in some of these jurisdictions, but that ultimately it'll be taken away from them. And
Why? Why do you say that, Tom?
because I believe that we are in a process which is now accelerating rapidly, where gold will be considered to be a strategic economic asset. So Barrick, for example, has said that copper is as strategic as gold is precious. And they may be right, but I'm equally convinced that gold is as precious and strategic, which is why our only focus is on precious metals. Because as gold prices rise, those countries which have gold mines, and very possibly silver mines as well, will look to be able to harness their cash flow. And there is a very real scenario in which, under the burden of debt all over the world, you have a severe recession, if not worse, as Ray Dalio has been gently pushing forward with his new book on how countries go broke. He's made an unbelievably compelling case for a real economic um, catastrophe if debt continues growing unimpeded, and it will. So we just have to accept that this isn't a question of if, but why. So when it comes to jurisdictional risk, I'm sort of with Woody Allen in a sense that he once said, "I'm not afraid of death. I just don't want to be there when it happens." So despite my successes in those frontier markets, I concluded that you want to have all the leverage to an underlying theme, but it has to be in a jurisdiction that will allow you to keep the fruits of that leverage. The safest jurisdiction in the world is the United States, and we believe that Alaska is already embarked in the foothills of a major natural resources boom, and we're leading it.
Wait, this is an important point there. So are you I just want to understand get you 100% crystal clear here, Tom. You're saying that in certain jurisdictions they would nationalize the gold. They would keep whatever gold, confiscate the gold from producing mines in said jurisdiction.
That's exactly what's happening. This isn't a reach. Years ago, I suggested to our counterparts at Barrick that Mali was going to nationalize their mine, despite the fact that nobody did more to put Mali on the map as an investment destination than Mark Bristow. And now they've essentially taken over the mine. And, it's the perfect example of people saying business is business. But here's the problem. When it comes to resource nationalism, you can't contain it. Just game it out. If the occupier, as it were, if the one who's seizing the asset is a dictatorship, as you have in Mali, those around, and in West Africa, they're all dictatorships at this point, almost all of them. They're going to say, why should they be able to get away with something that we can't get away with? Now, if the government happens to be democratic, which I think could easily happen in South America, once a democracy breaks the rules, the other democracies around will say, well, we have to do for our people what they've just gotten away with. And in either case, whether you're dealing with autocracies or you're dealing with democracies, in order for the government not to be tainted with the accusation that it's corrupt or in the pockets of the mining companies, they too have to seize those assets. Now, it can come slice by slice, what's called the salami strategy, or it could be all out, where they pick a fight, as what happened with Barrick in Mali, and essentially present the company with no options and now say that they're going to change management.
Is it a stretch to add Canada to that category? I bring that up, Tom, because as you know, the Bank of Canada no longer has gold as part of its reserves. And the pushback we often get is, well, Canada has so much gold underground. Could you see that scenario happening in a jurisdiction such as Canada?
Personally, no. But there are certain scenarios. I mean, if there is a, absolute global calamity financially, who knows what can happen? But I don't see it because the implications of a country like Canada making such a move are that we've really seen a breakdown in private property rights and maybe even the rule of law. And so the implication would be that gold is probably at around $20,000 or more by that point. So you have to game out not just a possibility, but you have to ask yourself, under what conditions, in what context could that happen? Um, and I think by that time, we've made a lot of financial decisions along the way. We've probably rung the cash register. And more than that, I hope we will have made some lifestyle decisions as well, because the world will clearly have become a much more uncomfortable place for those of us living even in a democracy like Canada. So the odds are very small, but the implications would be that gold is in the tens of thousands, which is not impossible, but to the contrary, I think it's actually quite likely, but not necessarily for the worst of all reasons.
We're going to get there, but you brought up Dalio, and I love to get your thoughts on his comments recently. He said the risk to U.S. Treasuries is even greater than what Moody's has said. The Bridgewater founders said the downgrade of the U.S. credit rating does not take into account the risk of the federal government printing money to pay its debt. Do you agree with Dalio that it's even worse than what Moody's painted?
No question. And I think that Ray, who is someone that I hugely admire, I think he's probably the greatest practitioner of applied history in the business world. And I think that his books should be required reading. I've made them required reading at Electrum. I respect him. I appreciate him. He's a very, very good man. But more than that, he is as smart as they come, and put aside the intelligence, he does the homework. And his analyses go back to the ancient world, which is an affinity that I share with him, but they extend all the way to the present. And I think that when Ray Dalio is talking about it's even worse than that, he's trying to straddle a line between being the town crier and not being that guy, Jeremiah, where everybody looks at him and says that he's the prophet of gloom and doom. And
Right.
I get that. Nobody wants to be in that position. You want to be in the position where you're doing your civic virtue like he is and warning people. And he has been very consistent in advising people to own some gold. He doesn't hammer the point for the simple reason that once you mention gold to someone, and you say buy gold, he knows that all the gold bulls come out of the woodwork and all they want to talk to him about is gold. So very intelligently, he has been saying buy gold for the last couple of $1,000s in the gold price. We've cited him very often as an early bull. I think that he's trying to say in the most elegant way possible, things are going to get bad and be prepared for a lot of things that you didn't think could happen. But in the meantime, as he once said, those who don't own some gold either don't understand history or the economics of gold. And he's been saying that for thousands of dollars. I haven't seen him recently, but I would suggest that he probably, and I'm not putting any words in his mouth. So Ray, if for any reason you actually watch this, it's my personal belief that whereas for many years I advise people to own two currencies, the dollar and gold. The dollar, because inasmuch as all paper currencies are toilet tissue, the dollar is double-ply. And until the renminbi is freely convertible, until the euro is the object of some more fiscal consolidation in Europe, the dollar still has certain attributes. There may be smaller paper currencies, but in terms of global currencies, the dollar still has some attributes that make it double-ply toilet tissue. And until fairly recently, that was the case. People would say to me, well, how can you be a bull on gold and a bull on dollar? Gold needs a weaker dollar. And I said, that's a myth, completely a myth. And I cite my own example where in 2007, I sold my energy company, and I got a very, very large wire transfer. And I had to ask myself the question that George Soros advised in his Alchemy of Finance, which is the most important decision that an investor makes is in which currency he or she are going to denominate themselves. And I looked at dollar euro. Dollar euro was 147. It's now, let's say, 110-ish. Gold was around $600. So gold's gone up fivefold while the dollar has strengthened. In fact, gold is the best performing currency in the entire world. And so I would argue that gold is the place to be. I can't say where the dollar is going to go, but I can tell you, don't worry about it. This concept that the dollar has to collapse for gold to go up is purely mythological. It's the same kind of mythological thinking that people had that you need commodities to go up for gold to go up. Well, that time when I got that wire transfer in 2007, oil was around $120 a barrel. It's now half that, and gold has gone up from 600 to over 3,000. Put aside the myths. Gold is in a bull market. Those who cottoned onto that early are now in a very comfortable position. There are some who are now coming around to the idea that gold is in a bull market, but you haven't yet pulled the trigger because they will say, for example, well, gold has had an amazing run. And I don't even look at it that way. To me, gold is still in the foothills of a bull market. If anything, I would say that we will look back on $3,000 gold as a complete gift, a gift in the same way as we look back now on the Dow at 3,000 in the late 80s as a gift. Those who thought that the Dow was over and then had those fears reinforced by the crash of 87, they stayed out of it and they missed one of the greatest bull markets in history. And I believe that gold will do the same. Now, in past interviews, when gold was 1,000-ish or whatever, I was saying that my first equilibrium target was between $3,000 and $5,000. And the reason why I gave such a wide berth is because I easily see it going up to 5,000, but then correcting back to 3,000 and then consolidating within a range. That's how volatile gold can become. We will see days where gold has a peak to trough trading range as big in absolute terms as where we are today. And I know that that's a big statement, except for I've got a lot of credibility on this subject. And I haven't changed my worldview because everything that's happened since 2007 has only reinforced my view that gold has the potential to be the biggest bubble we've ever seen. Buying bubbles early is rational. But then that comes down to how do you execute that trade? For me, and with John Paulson, the primary way that we seek leverage is through gold mining properties. And our conclusion, both of us, is that Donlin is the best way to be able to execute the big trade. But you've got to be in a place that is not going to nationalize you. You have to be able to sleep well with conviction that when you wake up in the morning, what you thought you owned the night before, you still own. By that standard alone, Donlin's perfect.
I don't want to miss that point you made before we continue on the gold route. Um, I'd like to get a little bit more on your thoughts on how you see the American economy playing out in the next 5 years, because you summed up what you think Dalio believes, that things are going to get worse and we don't even know how bad it is or what's around the corner. Do you have any feeling as what that could be? I mean, are we talking something bigger than a recession? What does that look like for you in the next 5 years?
I no more want to be um, the doomsayer than Ray does. Um, but I will say this. Um, I'm not going to make economic predictions. My strength is on understanding how to apply history and geopolitics onto a thesis and finding the best way to play it. Even going back to 2 years ago, the last time we did an interview, most of the attributes that I ascribed to gold, almost all of them were what I would call positive reasons to own gold. Being able to have an asset that doesn't represent someone else's obligation, the supply demand of central banks, the Indians and the Chinese being the largest consumers of a scarce asset, in which case you really want to own it, as they do. The positive reinforcement that people have had for gold as a store of wealth and a store of value. I did not want to resort to fear factors, things that can happen in the world to completely upend projections that I've made in the past and make them seem incredibly conservative. I will say this, however, and this is not a political statement regarding either the Republicans or the Democrats. Both of them have united in really one critical area, and that is spending money that the United States really doesn't have. We have much greater bipartisanship in this country than most people believe because both parties are willing to engage in something of a kabuki dance over how much money they can spend and get away with without disenfranchising them from any of their constituencies. They're both the same in that respect. Same meat, but a very, very different gravy. I would say this. From a geopolitical standpoint, my thinking is as follows. And I'm using a very broad brush here. This is, not a fine painting. This is a broad brush. American power rests on three fundamental pillars, and that is the global power. Number one, the ability to project military force all over the globe with a thus far unmatched capability, allowing America to play the role of global policeman, which has been highly accretive to the U.S. economy. Contrary to people saying that um, the world cheats us, it's not true. And I'll get to that in a moment. Secondly, the United States has been, since the Second World War, the chief beneficiary of aspects of the multilateral world order, which have enabled it to maintain its global hegemony over the years. Number one, a network of alliances that is unparalleled. If you look at the alliance systems that the United States has all over the world, from Europe to Asia, um, all over, this is something that the Chinese cannot replicate, for example. I mean, they can count on maybe Russia, Iran, North Korea. We have incredible strength. The multilateral organizations that direct the world economy or set the rules for the world economy are a function of American power and prestige. American soft power, that is to be able to say, we're not the Chinese, we're not purely transactional. Nobody's pro-Chinese. We are the United States of America. We're where you want to send your kids to school. A whole host of other soft power aspects. These are the second pillar that distinguish us from our autocratic rivals. And then there's the third, and that is we have the world's reserve currency. We account for roughly 15% of global trade. China is a much larger trading partner to more countries than the United States is now. We're maybe 20% of global GDP, but somewhere around 57, 60% of currency reserves. Why is that? It's not because the world has been cheating us. I'm not going to go so far as to say that we've been cheating the world, but I have a feeling people are starting to come around to that conclusion. First of all, when you have the world's reserve currency, you not only have the benefits, which are numerous, because people basically have to take your currency for far longer than they otherwise would if they were being sensible. But you also have some responsibilities and obligations. The United States, whether under Democrats or Republicans, we create debt and spend like drunken sailors. We spend without any regard for the responsibilities that we have. So, number one, we get to use our dollars to buy real stuff all over the world. That's a good thing. Secondly, they have to recycle those dollars by buying our debt. We are not being cheated. And for those who would say that, well, look at the United States, spends more than Europe or Japan or whatever, it's a rounding error in comparison to the benefits that we get for these countries looking to us for their defense. Because of the 100 billion or 150 billion extra we spend to defend them, we are able to unload trillions of dollars worth of debt. It's more than a fair trade. What's happened over the last few months is that people have pulled back the curtain, and over issues of trade, which are infinitesimally smaller than the big issues of debt, the United States has had the upper hand. And I fear that now that we've been exposed as not understanding any of the history or the practicalities, if you don't know when you're the one pulling off the scam and you show everybody that you don't know it, and you break the mystique, the charisma that allows everyone to engage in cognitive dissonance, to basically say, we know the United States has a huge advantage over us. When did they not know that? When did they not understand that we're getting the bad part of this bargain at least as much as they are, if not more. So when you ask me where is the U.S. economy going, my big fear is that now that the United States has revealed itself, particularly not by the way it deals with its enemies. It's much better to be an enemy of the United States than a friend. The way that it's dealt with that network of alliances, the way that it's dealt with countries that have gone along with the dollar recycling, I don't believe is a harbinger for good things.
i.e., Canada, Europe?
Yeah, everybody. More than that, when you say that you're no longer going to be responsible for the security of a country like Germany, Japan, South Korea, they depended on us for that. And in return, we got something from them, that they not become nuclear powers. We're going to see nuclear proliferation because these countries have no choice now. The mask has been stripped away. They can no longer say an Article 5, as you have in NATO, saying that all the countries will commit to collective defense. You no longer have that taken for granted. And that is shattering to American power.
Is there a risk that they lose the reserve currency status once they've exposed the game? Is that a risk for you?
So we have to bifurcate again. This is unlikely to happen overnight because of the deficiencies of the other paper currencies. Um, all fiat currencies are flawed, but they are relative instruments. It's the question of who's the least bad. What I do predict with metaphysical certitude is that we will see over the years the dollar absolutely collapse against the one currency that does not represent anyone else's sovereignty or obligation to honor, and that is gold. Gold is the best currency to own, period. And you could easily see gold's trajectory following the trajectory of the Dow.
I need to get one more point in here, Tom. I'm sure you obviously saw the news. I found interesting the ECB felt compelled to put out warning that gold's leverage and delivery risk could destabilize global markets under stress. Basically, the fact that gold's on the radar of the ECB, and they're saying it's a possible threat to financial stability. They all cited the pressure we saw from the bullion leaving England to New York, etc. Your thoughts on the ECB's warning here on gold?
I'm very glad that you raised it. It should be required reading. For gold bulls, the arguments that the ECB makes are pretty much reinforcing why gold is an attractive asset. Their arguments are very, very bullish. And their conclusion is that it could become so attractive that
Right.
as more buyers of gold choose to go from futures and quote paper gold to saying we want this settled with physical gold, that could
Yes,
create real problems. We saw that, by the way, in the silver market in 1980 with the Hunt
that's
brothers,
right.
where it nearly brought down you know, the U.S. financial system, or at least created, complete chaos amongst the, banks and brokerage firms. Um, for many, many years, gold and silver were traded on a daily basis, many, 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 many dozens of times more in the paper market um, than in the physical market because people just made the assumption that they won't settle with the physical. But everything that's happened over the last several years is an argument for settling for physical. The only assets that the Russians really had after the invasion of Ukraine and the sequestering or confiscation of most of their assets outside of Russia, but not gold because the gold was in Russia, has reinforced in the central banks and to many buyers around the world that the safest asset to own is physical gold in their home countries or close enough for government work. And the problem is there's really not all that much to go around. And if you just get, half a percentage point reallocation to gold, and some of those people take it in physical, you'll see gold multiplying from here. By the way, we've been saying this for years, but it always sounded so fanciful. And
It
now it's
did.
actually
It
happening.
did.
So, read that piece that the ECB put out because it's making the case for gold and it's making the
Exactly.
logical case that the implications could end up being destabilizing.
Well, it just makes me laugh because if their point was to try and dissuade people from buying gold, it's like to your point, making the case to own gold. And they're the ECB. They see the central banks hoarding gold.
I'm not sure that they were trying to dissuade people. I don't think that they were even really saying that gold is undervalued. I think that the case that they were making was putting
Hmm.
the possibility that there could be a freeze up in the system if
Correct.
people were saying, we won't settle on paper, we will settle for the metal. And that could cause instability. Any time that you inject reality into a market that is driven by liquidity, but is unmoored to the reality of the underlying physical, which is so small relative to the trading volumes. Um, they're doing the right thing. They're warning people. Um, if you're going to get into the gold market, be careful because there could be an incredible squeeze. Their argument is something that makes the case for why we could see gold surging because there's a squeeze caused by some realists asking for the real metal that many fantasists don't actually possess. And then you have a game of musical chairs and things get really fun.
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 Tom, I want to thank you for everything, your voice in this industry. And I think it just, when gold investors who have been through so much pain and waiting for this moment for so long see names like Tom Kaplan and John Paulson making a tremendous bet on gold, it's very reassuring. So thank you. It's just reassuring that we're on the right track here.
Well, it's been an incredible time for us. We think that NovaGold has a brilliant future ahead of us. And proud as I am of that, what I would like to say, John Paulson is a very, very prescient investor. He's also an incredibly brilliant partner and a true gentleman. We're very, very lucky to have him. We're completely aligned. We're going to do the things that we've always wanted to do. We're going to move ahead with updating our feasibility study. I think that has the potential to be highly, not just value added, but valuation adding. Our drilling would be geared towards showing what this project can do. We enjoy mine life, we enjoy grade, we enjoy low operating costs, and most of all, we really enjoy the partnerships that we have, not only with John Paulson, but also with our Native Corporation partners. Alaska has a brilliant future ahead of it, and we're extremely happy. But take note for all of you gold bulls, when John Paulson says, I see the next big trade, and for me, the best way to be able to execute that trade is with Donlin as the vehicle. Watch this space.
We wish you continued success and all the best, Tom. We love
Thank you
speaking
very
with you.
much,
Thank
Daniela.
you.
Always a pleasure.
And thank you all for watching this exclusive interview with Tom Kaplan. What an interview. Wow. Be sure to stay tuned to the Daniela Cambone Show. And as always, get your gold and silver reports. Stay on top of it all at DannyReport.com. And of course, subscribe to our channel. Thank you for watching.
Hi, everyone. If you're starting to question the system and want to protect what you have earned, you will want to download our free Gold and Silver Protection Guide. It's a clear, easy to follow resource that explains why gold and silver have stood the test of time and how they can help you build real financial security even as the dollar weakens. You'll learn about which metals to consider and the plan that best suits your needs, not Wall Street's. So click the link or scan the QR code to get started today. You're not going to regret it.